Well, hello, you trader nerds. Oh, happy day. Hope everybody's doing fantastic. A lot of y'all have said my volume has been a little bit low of late. Let's see if I can get that up a little bit. Hopefully, you hear me better now. I'm closer to the mic. Get it a little closer, a little closer, a little closer. There we go. And happy Veterans Day to all you veterans out there who have served our country proudly. We appreciate and respect you and the job that you have done. And that's something I didn't do. I didn't even take the ass valve when I was in high school. They said, "Hey, it's time for the ass valve, to see if you might want to go in the military." I said, "No." I said, "Put me in study hall." I said, "I ain't taking it. I ain't going in the military." And so I'm too scared to do it. And a lot of you did it. So kudos to you and hats off to you, baby, because we love you. So happy Veterans Day. And let's look at the market today. So TQQ is down almost half a point. Look at that, down 36 cents. So let's see what the NASDAQ is doing itself. NQ is down 0.14%, down 30 points. So the E-minis are up 12 points, 0.2%. VIX is down almost into the 14 handle. It's at 15. AD is at 247. And let's see what our little big green monsters look like. So this is oversold for the fair value zone above. In NQ, let's see what the ES looks like. ES looks like we are fairly, no, not fairly priced. Looks like we're oversold as well. So both look kind of bullish right there. See that? So we'll see. We'll see, baby. It is what it is. We do have some gaps down here that we'd love to fill, and the point of control is way down here. So it's very comfortable with being at that price. So we'll see if we stay oversold for a little bit. Let's see if we pop back into that little area up there. Let's look at the linear regression channel. Linear regression channel. I guess I can go ahead and draw something. I was thinking this was a binary event, but it is a little bit. Let's see. Volume down, down, up volume, down volume, down volume, down volume. So it looks like this thing is about done for. Let's see what we've got going on here. If we can draw a good little channel right there. Let's clone that baby. Dun, 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 dun. How's that look? All right. So, yeah. So we may have already entered an area of consolidation here. Remember, it consolidates, it spikes, it consolidates, it spikes, it consolidates. This was a little bit of consolidation, then it spikes. And then it looks like, just to my untrained eye, that it may be consolidating again before we have our next move. So who knows? The overall trend is up. And that's what our little plan is now doing, y'all. There's two things that we're doing. We're going with the trend, but we're also saying, hey, do we have momentum with the trend? Right? Not only is the trend up, but do we have momentum? And momentum is often confirmed by volume. And you see volume on this little move to the upside has been going down, 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 down. So this one is getting exhausted a little bit, an exhausted move to the upside, and rightfully so, because it was such a big day after the election, big candle there. And then the excitement subsides, and we're getting a little bit long in the tooth there. So that's good. So let's look and see. I can't believe this TMF, y'all. Look at this. TMF is down $43 in our account today. And let's look at this TMF thing. This thing just keeps going down, down, down. TMF is down 1.75%. I didn't know that they had the percentages up here. Look at that. Let's just do that. Let's see. Let's see. E-minis. Yeah. Okay, they do have that up there. I didn't think they had that up there. So that's good. Maybe that's new. And got the IV rank of everything. What's the IV rank of TQQQ? Not that it matters to us since we're not selling options in it. 25.9, but it's down 0.5%. Interesting. Let's see how our little hedges are doing today. So today is the 11th, I believe. And we want to go up to this account. I've got all these accounts. And let's do this and this and this. So we got $55,000 worth of, but it doesn't have our TQQQ in here. Risk analysis, move that to 60. Always having to adjust this thing. There we go. So we got about $44,000 worth of protection to the downside. That's it, y'all. I mean, you're fully protected. Now, someone brought up the interesting thing the other day. They said, Bobby, and I compared it to having it my cake and eating it too. If the market crashes, right, and is down 20%, why don't you go ahead and sell some puts on TQQQ? So we could look at that. Let's see, if we sold a put on TQQQ, say we went out 46 days, and say that we were going to make a bundle anyway if this thing crashed. So that is our cost basis, I guess, at about $70 there, our cost basis, and this thing is at 82.29, so we're doing really good. But where could you sell something and get something? And we could sell it to 68. That's a 20% probability being in the money. I don't know. Is that a crash? I don't think that's a crash, is it? So I don't know if you can actually, if there's enough strikes in here to make sense on this. Could you sell a 60? And, we're currently at 82. That's not a crash. So I don't know if you can do this or not. Someone said, and we could sell calls, covered calls against our position if we wanted to. But I don't know. I just think I'm just satisfied with what we're doing. It was funny the other day, y'all. I was asking Claude all kind of questions. Let's see. This was so funny here. I basically said that some people have said that we have overfitted the data, right? Let's see. Some people have suggested that our plan has overfitted the data in the back test and that it probably won't be successful in the future. How would you respond? And it kind of got defensive, right? Paul got defensive. He said, why our strategy is not overfitted. It is not dependent on a single indicator. We've got multiple indicators. We've got multiple uncorrelated signals. We've got QQQ trend signals, TMF trend signals, VIX adjustments. We've got a federal funds rate trigger. Each works on different market principles. Then it said our plan has a logical foundation. We do TQQQ and uptrends. And again, when we have momentum, as I was talking about, SQQQ and downtrends protects capital. QLD, when we get mixed signals, which reduces our volatility. We have TMF optimization, which reduces our bond risk. And we've got the federal funds rate trigger, which protects during rate hikes, all based on fundamental market relationships. Then adaptability. Our plan works in multiple market environments. Bull markets, we have TQQQ and TMF. Bear markets, we have SQQQ, TMF, or SQQQ and cash. Sideways markets, we move down to QLD, TMF. We adapt to changing market conditions, and we're not dependent on specific market regimes. Risk management, we've got multiple exit strategies, position size limits, no margin. We don't use margin. Cash preservation mechanisms are in place, and it's not optimized for maximum returns, but for risk-adjusted returns. Here's the evidence against overfitting. Is the strategy performed well in the 2020 COVID crash? It performed well in the 2022 bear market. It did well in the 2023 regional banking crisis. I don't even remember that. It has worked well in different rate environments and different VIX regimes. Simple core rules, basic trend following principles, well-established indicators, clear decision framework, and not using complex or curve fit parameters. So it was kind of like, hey, some may say that, but here's the reason why the plan is not overfitted. So I'm pretty confident with the plan going forward. Hope you are as well. Hope you have a wonderful day. I will see all of you tomorrow.